Bank plunged after a disappointing first quarter result. Profits declined nearly 50% when compared to last year. Net interest margins also declined by 32 basis points sequentially. ICICI Bank emerged as the top performer among private banks this quarter. Gaurab Jawalkar joins us with the bank's report card.
Well, yes, in the first quarter so far, from large private sector banks, ICICI Bank remained as a top performer, followed by HDFC Bank, Axis Bank and Kotak Mahindra Bank. And let's understand this with numbers. When it comes to loan book growth, although Kotak Mahindra Bank reported 14% growth, it was led by corporate segment, which was something which was not appreciated by the market. But on the other hand, ICICI Bank grew its loan book at around 12%, and it has been growing on a strong double-digit growth for the last few quarters. For HDFC Bank, they are actually bringing down their CD ratio, and they also said that FY26 growth is going to be in line with the market. But for Axis Bank, although the growth looks higher than HDFC Bank, let's not forget this is the third consecutive quarter where they delivered single-digit growth. So that was something which was weak point for Axis. When it comes to net interest margins, now again, ICICI Bank remained as a top pick, and the reason being that the net interest margins declined just by 7 basis points. Then comes HDFC Bank. Although the net interest margin decline was around 19% basis point, but it was when it compares to the core net interest margins that declined only by 11 to 12 basis point. For Axis Bank, there was a technical impact, and that is the reason why net interest margins declined almost by 17 basis point. So there was an impact of 4 basis point because of the technical impact, and I'll come to that in the asset quality segment. And for Kotak Mahindra Bank, the negative impact was 32 basis point. Now this was the highest across the banks, as well as it was also something which was not anticipated by the brokerages. When it comes to asset quality now, once again, HDFC Bank and ICICI Bank reported healthy asset qualities. But when it comes to Axis Bank, it actually reported spike in 88 basis point in terms of the credit cost, and this was because of the technical impact. Now, this is something which was taken in a negative way by the street. And for Kotak Mahindra Bank also, this quarter was not that great. Credit cost surged almost by 30 basis point, and this was specifically because of the MFI and retail CV. Although management said that in second half of the year, credit costs will come down, but this was something once again which was not anticipated by any players across the industry. Lastly, all the impact when it comes to return ratios, again, ICICI Bank and HDFC Bank, they managed to maintain their ROAs. In fact, ICICI Bank also expanded their ROAs on a sequential basis. But when it comes to Axis, profit declined almost by 600 crores because of the technical impact, and that also impacted almost by 15 basis point to its ROA. When it comes to the Kotak Mahindra Bank, the impact was highest. ROAs declined almost by 24 basis point on a sequential basis, and this was because of three factors. First is that the net interest margins have been declining. Second is that the credit cost, which was increased, and third is that the loan mix change, which has changed, and that is the reason net interest income was also low. So definitely on all these parameters, to conclude, ICICI Bank remained as a top performer, but on the other hand, Axis Bank and Kotak Mahindra Bank actually remained as a laggard in this quarter.
India's industrial production